Why does the stock price decline? That's what we will see today. We will see two categories, non-company specific reasons and company specific reasons. We will go through each of them and I will tell you if that's a good reason to sell your stock or not. Don't forget to leave a like and let's start. The first category is non-company specific reasons. So the stock is declining, but that's not the fault of the company. It's just because of the environment, the financial markets. The first reason is macroeconomic or geopolitical reason. For example, wars, recession, interest rate changes. This has an impact on all the financial markets. This has an impact on all the businesses and this will influence a stock price. For example, if we enter a recession, there is a high chance that the stock price will decline. But that's not because of the company. That's not because of the lack of growth or bad revenue, bad earnings. That's just the environment. We are living in an interconnected world. So if we enter a recession, most stocks will go down. So this is definitely a non-company specific reason. And most of the time, these fluctuations are short term. We are living in a capitalistic world. We will have ups and downs. The next reason is bear market correction. If the S&P 500 drops 20%, most stocks will drop, will decline with the S&P 500. So it doesn't matter if you hold a good business or a bad business. If major indices go down, there is a high chance that your stock is going to go down. This is not a reason to panic. This is not a reason to sell. It's just part of the market. And I would say that if you have some additional cash, it would be smart to buy when the whole market is going down. You want to buy when there is blood in the street. So if your companies are still fine in your portfolio and the whole market is going down 20%, 30%, this could be an excellent moment to buy. This could be a great time to buy great businesses. The next reason is the sector rotation. In the markets, we have trillions of dollars. Some sectors are favored for some years. For example, right now, AI is favored. But in 2022, energy was favored. It was a sector rotation. So you will have inflows, outflows of money, of capital with billions, trillions of dollars. Money is moving and this has an influence on stock prices. And sector rotation is quite common every 6 months. Every year you have one from the hated industries to the loved industries. So this will change. The world is changing and some industries are loved at the moment. The next reason why a stock price declines is industry-specific news. For example, Ozempic drug will hit food and medical stocks. The world is moving, the industry is moving, and sometimes new technology, new advancements will have an impact on your stock. And the stock will go up or go down. That can totally happen. You can be disrupted by another company and an industry could be hit by some news. If I hold a medical stock, I would be very aware of this problem. And if I held medical stock, I would monitor what is happening in the industry because this can be disrupted. A new drug can come in the market and this will have an impact on my stock. I would look into this. I will monitor over this. And this happens with the medical sector, but it can happen with any sector, any industry. Most of the time, there is no major change in the industry. But if there is a major change next year for your industry, you want to be aware of it. You want to know the big picture of what is happening for the whole industry of the stocks you hold. And the last non-company specific reason why a stock price declines is manipulation by market makers and algos. This is mostly short term. It has no influence on your company. And the price decline will most of the time be very short term and it will rebound. So this is just market manipulation, but we are a channel of long-term investors, so we really don't care about it. Now let's talk about the other category, company-specific reasons. We are stock pickers. We analyze companies for the long term. We want to invest in the best companies. So this has an impact whether we buy more or we sell. So let's start with the first one. The company misses earnings estimates or lowers forward guidance. You invest in a company, you've done the due diligence, and then for a quarterly earnings, the earnings are bad. The revenue is bad. The growth is bad. Is this a good reason to sell your stock? It depends. If that's just short term, you can just hold and ride it out because You've done the work, so management is competent, management is good, the business is good, and management will tell you if this is a short-term problem or a more challenging environment for many years. They will tell you. So if you've done the due diligence, you know the business, and you will be able to determine if this is a short-term issue or not. So yeah, missing earnings estimates or lowering forward guidance for one particular year, maybe this is not worth selling the stock for this reason. If it's just a temporary problem, that's worth holding. If this is major and we see some major deterioration for the earnings, at this moment, maybe it's a good time to sell. Normally, you've done the work, so you are able to determine if this is a short-term issue or a long-term issue. And if you don't know, if you're not sure about your analysis, I'm opening 3 seats for my coaching program. I will accept 3 additional people. This is a coaching program where I teach you how to do the analysis of a stock, how to build a strong portfolio of great businesses for the long term. So you can book a call with me. There is a link in the description, a Calendly link, and I'm accepting 3 people for the month of August. So if you want to go deeper in your analysis and build a strong portfolio, I encourage you to book a call with me with the link in the description below. Now, let's continue. The next reason why a stock price can decline is a cyclical slowdown in demand for products or services. Some markets are cyclical, some industries are cyclical, and some companies are cyclical. Sometimes, for some years, there is a boom in demand, so high demand, high prices, everything is fine. But some years, for some reason, there is low demand and low revenue, low earnings, and the stock price is declining. So if you hold a position like this, be aware of this cyclicality. Best case scenario, you want to buy when everybody is pessimistic about your stock. You want to buy when there is low demand for your products and services because you've done the work and you know that this will rebound. But be aware of this. The stock price can decline because of cyclicality in the demand of your products, your services. The next reason is temporary bad news, such as a product recall, lawsuit, some scandals. These are short-term problems, short-term issues. It will last a couple of days, a couple of weeks, and for us long-term shareholder, it has no impact on the prospects, on the growth of our companies. We invest for the long term. We invest for years. So literally, temporary bad news, couple of days, couple of weeks, this will have no impact on our analysis. So in that specific case, sometimes the stock price can decline because bad management behavior or some product recalls. This is a good time to buy actually. This is a good moment to buy at a discount. This is a very short-term problem that will be most of the time fixed. So I would suggest this is a good moment to buy when there is panic about the stock because people that sell the stock are emotional. And this is not the way we look at stocks. We want to invest rationally for the long term. So actually, it's a good time to take advantage of this short-term fluctuation in the stock price decline, to buy more when it's cheap. So yeah, that's an easy pass for this one. The next reason is major shareholder forced stock liquidation, manipulation by algos. Again, short-term stuff, short-term impact on the stock price, and again, no major impact on the long-term prospects of the company. So same situation. Take advantage of these opportunities to buy more when people are panicking, when it's cheap. You can definitely have some great deals when there is some panic about the stock. And the last reason, which is the most important one, is structural long-term problems. This is when the bad stuff happens. This is when you invested in a stock and the stock price declines, but for a good reason. It declines because the business is deteriorating. We've seen this example with Nokia, Blockbuster, Kodak. Their business models have changed, are disrupted by competition, and these companies were complacent. They didn't fix the issue. They didn't innovate enough, and they will collapse soon. That's the point of these structural long-term problems. It's maybe already too late. The stock will maybe not recover. I have some examples here. For example, you can have a company economic moat that is deteriorating. Yeah, if you invest in the stock for the moat, for the competitive advantage, and it no longer has the competitive advantage, this is not a good reason to hold this stock. You held it because of the moat. There is no moat anymore. Competition has come and is eating your lunch. So at this moment, the company is not as good as it was in the past. It could be a good moment to sell. Another one is permanent disruption of business model. Yeah, Blockbuster with Netflix, Kodak with all the different cameras, digital cameras that arrived in this world. If a management is not aware of a problem and disregards the problem and is becoming complacent, that's a major shift, because in this capitalistic world, you will get disrupted all the time. Competition will come for you all the time. If the management is panicking and is not aware of this problem, this is very bad news for the company in the long term. And the last point is permanent change in consumer behavior. Society changes, people change. People don't read the newspaper today. They just read some news on the phone. So if you are in the newspaper industry, you don't have the love of customers. There is definitely a change in consumer behavior. And I would say that this point in red is a very good reason to sell an investment, because that's a major problem, a structural long-term problem for your company. And if you are in this situation in red, you need a very, very strong management that knows how to be efficient, that knows how to reinvent itself to become relevant again. That's very hard. And sometimes it's already too late. Even if you invest a lot in research and development, marketing budget, maybe that's already too late. So yeah, this situation in red is urgent and could destroy a business. But I would say for the remaining points in white, it depends. Each business is different, but for all businesses, you do the work, you do the analysis, you do the due diligence, and you will know how to handle these situations. But I would say these are all the reasons why a stock price can decline. And that's it for this video. As I told you previously, I'm accepting 3 additional people for my investing coaching program. So you can book a free call in the description below. That's the first link in the description, and we will talk. We will assess your situation, your portfolio if you have one. I will give you free advice, and we will see if we can work together how you can become a great investor, so you won't panic in these situations if your stock price decline. In this coaching program, you will learn how to properly analyze a stock and how to build a strong portfolio with great companies. So you will learn a lot of things. Book a free call with me. Literally, you have nothing to lose. That's it for today. You have another video over there. Don't forget to leave a like and subscribe for more videos like this. Okay, see you over there.